In this presentation, we will use tax software to consider the possibility of needing to record the refund from the state and local government on the federal income tax return. We will be using Lacert tax software by Intuit, the owner of QuickBooks, but the data input and the process of inputting the data and then generating the forms will be similar to other types of software as well. We're considering with regards to the income formula up here on the income line, we're going to say that we got a refund from the state in the current year. Do we have to include that in the income line? That's the question. The form that we would see is a 1099-G. So we'd have a 1099-G from the state. For example, if we were in California, last year we paid California income taxes along with the federal income taxes. We processed those two returns at the same time, sent them in. And the question is, did we get a deduction for the California taxes as to whether the refund that we got in the current year, now in the current year, we're saying California sent us a refund, and we want to think if we need to report that on the federal income taxes. Now, note, obviously, on the federal refund that we got, you might say, well, what about the federal refund I got this year? Well, the federal refund isn't something we got to deduct for federal income taxes. It's something we overpaid in the prior year. So that one, we're not going to have to include that, right? We're not even going to get any documentation for it. We'll just get the check or it'll be deposited. We're not going to get a 1099-G for it. So anytime we get a 1099, like we'll get one here from the state, we'll get something that says 1099-G. And anytime you see 1099, you're going to go, is this something I have to report in the income? Because that form in and of itself means that the IRS got this 1099-G. And so the question is, that would usually indicate it's a reportable type of event. So the question is then, do we have to include this on the 1040 or not? And if so, how? Here we are in our mock 1040. This is our 1040 with the mock client, which is James Smith. We've got the single individual. If we scroll down, we have the 100,000 in W-2 income. We're now going to say that we got this 1099-G. Now, if we get the 1099-G, we can rely to some extent on the software. So let's think about the software and think about, well, what would happen in terms of the software if I just look to where I'd want to input this form? Because typically if I have a 1099, I'd need to input it somewhere. Let's just first do the data input and then think about why the software might do what it does. So if we go down, I don't see anything that says a refund. I would think maybe then it goes into the other income line here on line 7A. And that's going to be supported by the Schedule 1. So let's go then to the Schedule 1, which then has on line 1 the taxable refund credits or offset. So that's the line we would expect it to be in. I'm then going to jump to the data input screen. I'm going to say, all right, Lacert, where do you want me to put the data to get to this line? I think I need the refund there. So I'm going to say jump to the input screen. And it says here there's a 1099-G, the 1099-G. So let's start with the 1099-G, because that's the data form that we would have. Within the state and local income tax, I'm then going to say that we got a refund. Let's just keep it at that 1,000. So I'm going to say 1,000 refund. So I've entered it in the state and local income tax. If I then go to the forms, say let's check out the forms, and then say, hey, it didn't show up here. I don't see it there. What happened? I don't see it on the 1040 front page in the 1040. Why isn't it included in the income line? Now, the reason is because, the Lacert needs more information than that. And the general rule is going to be this. I mean, if it's a continuing client and you rolled it forward in just about any tax software, the program will kind of know that, and it'll basically put what should be there or not. But notice, if I don't see anything, and I'm trying to explain this to someone, my supervisor or a client or something like that, what am I going to say? Why, I can't just say, well, the software knows best, We're going to say something. And if it's a new client, then the software doesn't have the information necessary to make that determination. So what would be the information that they would need to have? Well, in the prior year tax return, we need to know whether or not they filed a Schedule A, because the Schedule A will determine whether or not last year they were able to get a benefit from the deduction. So a Schedule A would be down here on line 9. They didn't take the standard, which was the $12,200 this year. They didn't take the standard last year. They took the itemized deduction. If they did take the itemized deduction, then they would have a Schedule A. So if they don't have a Schedule A in the prior year, you're pretty safe to say that it won't be included in the income line. If they did have a Schedule A, then you need to determine whether or not they were able to deduct the state taxes. Did they deduct the state taxes on the federal tax return on the Schedule A in the prior year? And if they did deduct those taxes on the state tax on the prior year, how much benefit did they get including how much benefit you want to take the smaller of the benefit that they got from the smaller of the amount of the refund that they got, or versus the amount of benefit of the amount over the standard deduction. Because remember, they only get a benefit from it if this itemized deduction clears the standard deduction. So it gets a little bit complex if you're in kind of that gray area, and that's why if you have a more complex return, if you have a return, for example, that has a Schedule A, which is going to be a more complex return, you're more likely to have some kind of things that are going to roll over and affect the current year. So in that case, it would be best if you can actually enter the prior year tax return into your prior year software and then roll it forward. That's going to be the easiest way to make sure that you pick up the information properly for any kind of rollover information. If it's a very simple return, may not need to do that. And this might not be something that would trigger that you need to do that. But anything that has a Schedule A or a Schedule C, then I would start to think, hey, it's probably best for us to do this right and put it into the prior year and then roll it forward. And then, so if we go then to the Schedule 1 and I go back and jump into it again, you'll note that we have some other useful data input rather than just putting into the 1099-G, which is the taxable state refund worksheet. So if we go into the taxable state refund worksheet, you'll see some of the questionnaires to help you figure out whether you should do this or not. So basically it's saying, did you take the itemized deduction in 2018 last year? We're going to, and if they did, that's the only, if they did not take it, then it's over. We wouldn't be including it. So that's fine. If they did, we could say, okay, they took the itemized deduction last year. Again, if we pro forma it forward, if we input the data into the our tax software last year and pro forma it forward, we don't need to do this because it's already, the software will already know. But if it's a new client and we don't want to do the pro forma thing and we just want to basically put it into the new software, they have this little worksheet that'll help us out. We can say, did they itemize last year? And then it says income tax deducted. This is an override given by the O here. So if you want to just do the short method here, you can say, was the income tax deducted? I'm going to say 1, it was. Or you can do the long method here and basically put in the key numbers from the prior year tax return, the adjusted gross income, the state and local taxes, and so on and so forth. If I put a 1 here and check off the itemized deduction in 2018, I'm indicating they had a Schedule A last year, they had itemized deductions, and they deducted the state taxes for it. So then I'm going to go back up to the forms, and I kind of overrode it to do that. And I'm also going to override this point here on the income tax refund. If itemized last year, I'm going to put the 1,000 here, and that will include it in the form up top. So the proper way to do that would be to put all the line items in there from the prior year to help it to figure that out. But we're just going to go over the general rules here. And again, in my view, if you have a more complex return and you have software that you can enter in the prior year, if you have the Schedule A, then I would do that. I'd go into the 2018 tax return, actually enter the tax return from the client into our software, and then pro forma it forward. And then things such as this and any other type of rollover will be more likely to be picked up that way. So I think that's the safest way to go. So general rule then, if you have an existing client, it'll roll over fine. And you just basically need to know the rule as to why this amount would show up or not. If you have a new client, then I would say that if you do not have a Schedule A, then it's maybe a basic enough return that you don't need to enter the client's tax return that hopefully they give to you as you enter the new data into the prior year software. You can just basically enter it into the current software because there shouldn't be any rollovers, and the state income tax is not something that you will be including. If you have a more complex client and it's the first year for them, say a client that has any of these schedules, a Schedule A or a Schedule C or a Schedule E and possibly even a Schedule D, then I think it would be worthwhile to take their prior year tax return, enter it into your 2018 software, whatever that may be, and then pro forma it forward. And that will, any kind of rollover kind of situation, as well as this kind of situation, will then be more likely to pick up properly within the software. So in any case, there's the tax refund. It'll then sum up down here. We'll go back to the first page of the 1040, and here it is on the other income line. This would only be included if you got the benefit of the deduction from it as an itemized deduction in the prior year.